Alone, how you doing? All right.
I'll improvise.
Well, let's just start then. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. On the Discord and YouTube, welcome. If you like the content, please hit subscribe button and share it with your friends. Welcome. And disclosures are very important. Please read them. If this is the first time you see the disclosures, please visit the optionsclearing.com, the link on your screen, to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future picks will be profitable or will equal past performance. All right, let's take a look at the market and see what happened. So we do have a CPI data came out today, PPI data coming up tomorrow. Initial reaction was the 4.5 level to 4.65. So pretty large move in the interest rates because inflation data did come in a little bit hotter than anticipated, with the idea that interest rates will stay higher for longer. Right, and the Fed will not. And I think the odds of Fed cutting in September dropped close to zero, and then the rate cuts got pushed back to December, basically December. But it gets fluctuated as the new data comes in. But as of right now, the expectation is that that the interest rates will move in. Will be adjusted down only in December of this month, of this year. So 10-year yield is at 463. You can see dollar hasn't really moved. I mean, it did initially, it rallied, but it did pull back together with the rest of the market, right? QQQ is actually turning positive. So we had a sharp drop when the market opened, and then as people digested the news, no reaction, right? So I would say there's still no new signal. Market has been trading between 610 and SPY to 590. So it's been trading in a narrow range. And it's waiting for a new signal. So we retested 50-day moving average successfully, got defended. Stock market bounced back. We do have PPI data. Maybe everybody's waiting for PPI data, and market can move more tomorrow. But for now, small caps, interest-sensitive stocks are down. So small caps are down, and regional banks are down. Semiconductors are down, but QQQ, high beta stocks, basically flat, slightly positive, and spiders is flat, slightly negative. Gold continues to outperform. We're making new highs almost every day. Silver also has a strong rebound. Europe, a lot of people are shifting their attention away from the United States. The United States has been trading sideways for the past couple of months, but Europe 2025 looks like, is up at least 10%. And same thing could be said about China this year. So something to keep an eye on in 2025. Platinum prices have recovered. China looks like it's breaking out of this long-term range since October of 24. It's been consolidating. Now it looks like it's resolving to the upside. So China continues to outperform. Kukel slightly down. Bitcoin still below 50-day moving average, below $100,000 level, but same as high beta, just no new signal. Consolidation, trading sideways, looking for momentum either to the upside or signal to the upside or to the downside. So we need a reason for the market to break out of this range. Crude oil pull back. Nvidia down. That's about it. Any questions so far? Fred, welcome. back. So let's see, materials consolidating, but up in 2025. Home builders, thanks, they are retesting the year-to-date lows. We talked about China. It looks like it's trying to break out and at least reach the October highs. Industrials are still lagging, but consolidating, right? Still above 50-day moving average. So industrials doing well. General Electric continues to do well and outperform. Let's see, what else do we have? Healthcare, also one of the stronger, dismal 24, but consolidating after rally. Tesla consumer discretionary underperforming under 50-day moving average, but up today. Transportation is above 50-day moving average, so it looks like transportation sector is stabilizing together with industrials and staying above 50-day moving average. And semiconductors continue to underperform, right? Trying to reclaim 250-day moving average. What else? High beta stocks doing well, consolidating at the upper range. And that's about it. All right, so let's review some of the latest and see if we want to make any adjustments. I think I forgot to. Tunnel. Give me 1 second. Review these positions on paid pro. Give me 1 second. Need to fix this. So the new paid program, I need to make sure that people can see the data. Coach. Box. Okay. And then, so these were the new trades. Let's. So we have BSX, Spiders, RCL, and Citigroup. Right, those are the 3 stocks.
So underneath the program, all you have to do is write Hughes Pro, and then to the far right of that, it's going to ask you.
Okay. That's all right. So now, okay, so perfect. This is not here, and then in yellow tunnel.
It's more accurate.
It is. So I apologize. So this is a paid program, and we can talk about BSX, Citigroup, and RCL. So BSX was the trade from the last week. Signals. I mean, it's been a strong uptrend. Continues to have a strong performance. BSX is up. RCL did pull back initially today, but holding on to 20-day moving average, so still in a strong uptrend. And finally, Citigroup. Same idea, did react negatively in the morning, but trading above 20-day moving average, which is positive for the stock. Let's look at some of the other positions. Okay, so Citigroup, still long. I had a spread, so I did close the spread yesterday because this was part of Elite Service and Dynamic Power Trader. But I basically closed the Citigroup and I rolled it into the option position. So I still have Citigroup. Capital One Financial, 185, 200, still bullish, right? Banks did well. I mean, the credit cards pull back to the 90-day, to the 50-day moving average, still trading below 20-day moving average, but still in strong uptrend. As long as it's above 50-day moving average, I have a spread. I think the trade continues to go higher. Elite, welcome back. Cisco. So we do have to make a decision on Cisco. So it pulled back, it rallied. The earnings are after close. Probably don't want to take the risk of the sell-off. I kind of was hoping that it's going to, based on the signal, rally into the earnings. It did not. Let me just see what the position looks like. Manage position. Cisco. Yeah, I'm going to close and rotate on something different. So Cisco. Cancel. Cisco, cancel. I'm going to close, take a small loss of 50 cents. 62.38. I mean, obviously, you know, in terms of expectation, you can look at maybe do a roll into a spread. Maybe that will be a better trade. But you know, in terms of expected move, right?
There are 5 $10 wide spreads.
Let's do Cisco.
There is a $20 wide spread. He's going to end up spending probably around.
So today after the close, right, an expectation that it can move, you know, on average 4%. It moved in historically 4%. Looks like expectation that it's moved 4%. So a lot of it just depends on the size, right? If you have 100 shares, 50 shares, and you want to hedge, you can, you know, buy a put spread. If you want to keep the stock through the earnings, but you know, there's a risk that it could pull back, you know, 4 or 5%. So if you don't want to take that risk and you don't want to buy a put spread, then I would just exit the position. So that's Cisco small caps. So that's a hedge to 30 to 25. I mean, we do have PPI data, but it looks like market so far has been resilient to these pullbacks. Small caps continue to drop below 50, below 200-day moving average. It has reached the support 21. So I mean, we're getting close to oversold levels. So maybe after tomorrow I can close this trade. At this point, let's see, IWM, and it's slightly higher. I have 230 to 25 spread in March. So for now, I'll keep the hedge. Looks like small caps continue to be the most sensitive to the interest rate change, and this is a bearish position. So for now, I'll leave it. JCI, let's look at JCI. So same thing, it pulled back, now recovered, getting close to 89.35. I think I have an order to close half of the position at 89.90. So still waiting. Energy, OKE. Let's look at OKE. I mean, it's not going lower, but it's stabilizing, right? We do have earnings in 12 days. So for now, I think this is overdone. And it's a stock position, so I'm waiting. So this exposure to the energy. We talked about RCL. Let's see. What's begun now? Sorry about that.
Okay. Sure. Understandable. Very good. Well, then I'll do this for you. I will email you to your Gmail address and do letter of direction. And, you know, like I said, just write in Hughes Pro for the program. For the dollar amount per trade, 1,700.
So I'm out of position. So where do we go? OKE, SRE. and Texas Instrument. So let's look at Texas Instrument. So it looks like it continued to break below this level. It has recovered somewhat, but it's a weaker stock. I'm inclined to next, another down day and just close the position and take my losses, because it's been a while since I had this position, and it's, earnings didn't help. So deploy capital somewhere else. But for now, I still have a Texas Instrument. All right, let's look at. So I don't have a lot of positions. So what do I have left? 1, 2, 3, 4, 5, 6. Okay, so let's see what the signals were. Active trader, open new tab. Let's do it here. Aggressive power trader. So for today, the signals were progressive, right? And PFG. Fred has asked me, I think Monday, but progressive looks like it's breaking out. And we do have PFG now as a signal. McDonald's and AT&T. AT&T has been in strong uptrend, continues to trade higher. It looks like it's wants to trade higher. So continues to break out. I think maybe a small position in AT&T makes sense. That was the signal. So let's see, what do I have in Profit Accelerator? So we have Cisco, JCI, Spiders, Tesla, Texas Instrument. Let's do AT&T. So log out, log in. With yellow tunnel. All right, so let's add AT&T. Okay. So now part of the Profit Accelerator. This is where I only trade stocks. You have AT&T. So let's initiate the AT&T position. Again, in terms of support, I mean, the breakout is at 24, right? So if you're a longer term trader, I would say if you hold a position for a few weeks, right, then use 24 as your stop level. So if it drops back to 24 level, my goal is to be down less than 1% of my portfolio, right? So it's $1, less than 1% of my portfolio, right? So it's $1.30, 30 shares, or 70 shares. So that would be, the goal is, if you have a $10,000 portfolio, 1% is $100, right? So if this is a false breakout and AT&T reverses back, then you would exit at 24, or maybe you want to add at 24, just depends on the market conditions. But I would look at 24 as your line in the sand. So let's do that. Stock AT&T. Okay. And then again, maybe close half of the shares and capture about 1% gain, right? That would be 25 cents, or 25.55. 55. And then sell another half of the shares. Maybe look for 2% profit, which would be about 50 cents. So 25.80. So that would be my exit strategy. All right, so bought at 25.31, closing 25.50, 25.85. Keep an eye, this is also sensitive to interest rates. Could be used as an alternative, right, for inflation, because it does pay dividend. AT&T pays you a large dividend, relatively large, right? 4%, 4.5% dividend, and you have a kind of around dividends. Usually, as the stock pulls back because there's a pretty large cash distribution. So just something to keep in mind. But other than that, it's been in a strong uptrend in the past couple of years. So that would be my trade for AT&T for the new positions. And then in terms of technology, let's see. I did trim my tech positions. So I'm out of Tesla. I haven't seen any strong signals in the high beta stocks. But let's see. Recording history. What was yesterday? Amgen, CTSH. CTSH does look good. What else we have? CTSH. Casco, JCI. I do have JCI. Okay, so I added JCI. Okay, fine. And this is more industrial. But these are some of the other trade ideas. 26 cents. All right, cents. Very nice, Fred. Thank you for sharing. Yeah, I like this signal. So, I mean, a lot of people don't like AT&T because, very large debt, right? And very sensitive to interest rate. But I think it got beat up in the past few, like at least in the past decade, where I think maybe the worst is over. I mean, right now it's trying to break out of this downtrend from 2017. We'll see how successful it can be. But people are looking for dividends. I think this is one of the reasons gold continues to grind, because if the market is going to try it sideways in inflation, it's going to be here for longer, than you're looking for dividend, some kind of an income generation strategy. And you can sell calls, right? You can do cover calls against the, your positions in the AT&T and gold. Thank you, Fred, for sharing. Let's see. Any questions on AT&T? You can program if you look at the orders. All right, so let's look at Cisco. It does have earnings after the close. Let's see how people are positioning. Let's look at gamma exposure and where so expectation is that somewhere near 4% move to the upside or to the downside. And based on the positioning data, well, 65, right? So a lot of people think that Cisco is actually going to have a strong earnings, and one standard deviation would be moved to 65 level. You can see this is the largest open interest, about 35,000 contracts. So 35,000 contracts only in the 65 strike. So if you're bullish and you think it's going to move at least one or maybe two standard deviation, then you want to kind of be, long volatility, right? You want to be do debit strategy. You can do long call. You can do straddle, butterfly, directional butterflies. You can do calendar spread. Right? If you don't think it's going to move to 65 level, right, then it's kind of Bob's favorite is to sell premium, sell iron condor. I mean, today we have earnings. So Dash was up as much as 5%. DoorDash, Supermicro Computer was up as much as 12%. Pulled back after the inflation data. Upstart is a star of today, and it's up 33%. So, in an interest-sensitive environment, when the rates are going lower, kind of, from the long-term perspective, then you have exposure to loans and loans generation. Upstart is actually, despite still having high interest rate, but not as high as maybe people anticipated, Upstart is able to break out, and it's up 33%. Lyft is down 5%. We'll see what was the reaction to the last few earnings. So yeah, about 3-5%. So let me look at the infrastructure play. Here it moved 6, 7, 10%, almost 10%. All right, so let's look at that 65 strike and see what it's worth. So 5% would be $3, right? So 62 to 65. And 65 call is worth 60 cents, so very expensive. Okay, so there are a lot of expectation that it's going to grind to 65 level. Let's see. So the large position 65, let's see, 70, 65. 70 is not a lot, so 66, 36, 67. So you can sell 67, 69 call and get about 15 cents. Let's see if we do 67, 68. It's about 10 cents. Success, that would be great. Yeah. Peace talk for Ukraine. Hopefully that reach some kind of agreement. I agree. All right, let's do puts first. So puts. And there's some position at 55 strike, not a lot. Let's see 57, 55, 57, 55.
See you guys tomorrow. Let's do it again, Nick. Yes. Calvin, I'm doing well. How are you?
So the put spread. So you can sell both call spread and put spread. I'm just trying to decide what I want to do. Okay, so I'm inclined to sell a put spread because I don't think it's going to have a bad earnings, especially with AI and infrastructure and no signs of recession. In theory, it should not have a bad earnings.
$15 calls are currently $1.15 bid off that $1.20.
Okay. We haven't moved 4% in a while. Okay. So that's a put spread. And then on the upside, I'm inclined to do calendar spread since there's a big position. So we can do calendar spread. Let's see, buying, call. So I would buy February, let's say 28, and sell February 14. So let's do that 65, 66 strike.
$1.23. Okay, you're welcome. Take care. Bye-bye.
Okay, so that'll be a Cisco. Okay, so let's see here. Let's do the same here. So Cisco, do $1 strike difference. That's the $2 strike difference. So the put spread, I did, what did I do? 58.56. So 58.56 and collect 19 cents. So move beyond 1 standard deviation, 19 cents.
And then his email is requesting.
Why does this not work? Sell 18, buy 58.56 Cisco. Okay. Looks like it's delayed, but okay. So you can see the orders. So Cisco, so I sold the 58.56 put with the idea that the Cisco, in terms of positioning, will not drop below this 1 standard deviation and 60 strike. Or at least trade in between 55 and 60. So that's selling the put spread. And on the upside, I'm going to do calendar spread. Let's do calendar. And I'm gonna select, what did I do? 65 strike. I think I did 66 strike. Okay, so let's do 66 strike. February 19, 16 cents. Go a little bit further, 28, and spend maybe 20 cents. So buying February 28 and selling February, giving myself a little bit more time. All right, so I'm bullish on Cisco. I don't think it's going to move to 1% to the downside, 1 standard deviation to the downside. I think if there's positive news, it's actually going to move to 1 standard deviation to the upside. So then I'm using this premium to pay for the calendar spread. So this would be a losing trade if I'm wrong, and like Microsoft, where it sells off 2% standard deviation. I mean, Cisco doesn't invest into infrastructure as much. You know, they're not buying servers or chips. They're more of a resell of the, you know, networking equipment for S&P 500 companies. And you know, if data centers are growing, then a lot of those switches are made by Cisco. So we'll see. If that's the case, then that's one way to express your bullish sentiment. If you don't think it's going to move to 66, right, then you can do like what Fred usually, or Keith, you know, do iron counter, and then you just sell a call spread. Any questions on Cisco? All right, so let's send some of these alerts out. So we have Cisco today. Okay, so Cisco and AT&T, that's good. All right, so let's see. Let's start with TPT. Okay, so first Cisco rolled Cisco position, and then that's it, right? That's all we did, right? Rolled Cisco position. That's good.
It's, no, that's fine. I just want to make sure I've got the information straight. That way when I talk to the person, stumbling over stuff. Just, eliminate some confusion that you get. Yeah.
So Cisco did sell to close. Cisco trade. Cisco. Best execution is 62.38, 62.38. Okay, and then I did buy to open and then sell to open. And this is sell to open. This was what, February 14, right? February 14. So February 14, and I sold what, a 58 put, 58 put, and I bought 60 put. Okay.
The accounting with them. We'll go over the positions, the current positions, the forward positions. And you talk to them,
So the current price is what? About 19 cents. Put spread 17 cents. 17. And then
well, not only that. Yeah, exactly. As you should. He really wants the layups. Let's be honest. He just wants the easy layups and bill them, and that's it. They got a question? Can't handle it. Talk to yourself. Throws it on you.
let's see.
Yeah.
And sell to open. Buy to price. All right, so we did buy to open. That was February 28th, right? Yeah. February 28th.
So that's really why when you give me the death thumb and one person.
And your sell to open February 14, and this is what, 66 call, 66 call. This is current price is about, what is it, 19 cents. Right. So calendar spread is 19 cents. Okay, so buy to open 60, sell to open, no wait, sell to open is 60. I did the opposite, sell to open 60 put and buy to open 58. So that's a put spread, and then buy to open February, sell February 14. And this is Citigroup. Yeah. All right. So that's Cisco.
Yeah, he wants the layouts. We all do. So, but anything that requires, more than 5 minutes of this time.
So let's do Cisco spreads. So this will be open. This go. Spreads.
said, next time you have that, let me know. Buy dinner for them. And then
So open Cisco spreads.
He actually says even better. I was gonna say the same thing. So I told him then. I would love to have the opportunity to do that. And then I told him, he goes, yeah, the next one will be in February. I go, have 2 of your employees. Have 2 years, have 1 month. And I said, look at me, spending all your money. So, yeah.
Cisco. Okay.
Yep.
Okay. So now we did that earnings, and then finally AT&T.
Good. It's great.
AT&T is easier because it's just a stock symbol. AT&T position.
And Nick and I had talked about that as well. So I think the next time it happens on your end, yeah. Yeah. We used to do that all the time. I would do that at least once a quarter, when we go to some author's presentation that they're having at a hotel.
AT&T.
Fly out on Friday night.
So current price is 2030, 2530.
The recent one that I did was in Las Vegas with Chuck.
2530.
And that was
Okay. Buy to open AT&T. And this is a profit accelerator. Okay. Sorry, it took a little longer to send it. Okay. Fred, Lalit, Patrick, are any questions on the trades from the Cisco calendar? I mean, my expectation that, that if it moves to 65, I have a choice. I can close the short, or before, if it doesn't get to 65, right, anything under 66, I can close, the short leg and leave the long leg to go. Or, I mean, if it gets to 65, 66, I can just close the spread, right? We've seen like 50% profit, right? Maybe 100% profit, but somewhere around that. I mean, often what works is that it moves to 65, you close the short put, right? And then you let long put, you close the short call and then let the long call go further. But, sometimes it works, sometimes it's not. But, if I can close the trade and make 50%, then I would just close the trade. So that's Cisco's position. Any questions? Okay, let's see if there's any other earnings we want to discuss. Let's look at Affirm. So Affirm is consolidating, right at this level, 73.11.
Sure. Absolutely.
Okay, so firm continues to stay above that uptrend. We talked about Cisco.
If there's anything you need from me, let me know. All right, dude. You too.
Let's see, DoorDash up 4%. So I do have DoorDash call. See if I can close it for $6. Okay, so I have DoorDash. Small. We talked about small caps. Okay, QQQ. SP. Okay. Let's look at Schwab. Give me 1 second. All right, so let's see who else is announcing earnings after the close. So CVS had earnings today. So that looks strong. It's been stuck, been beat up quite significantly, but it's recovering. So CSV did well. How's MLM materials? Materials not so good, continue to be weak. Okay, so we have Cisco, Williams Company. So OKE might run after today because WMB is about to announce earnings and it got beat up significantly. So we can watch WMB too. After the close, Robinhood. Robinhood is a good stock. So it's close to all-time high, or at least since the IPO. And then a lot of their profits is derived from used to be GameStop, meme stocks, but now I think it's a lot of exposure to Bitcoin. Expected move is about 10% to the upside or to the downside. And you have some positioning at 65, implying more than 10% move. It has moved on average 10% to the downside, more room to the downside. Up 9-10%. I mean, 10% move would be 62. So, I mean, you can target the 60 strike, I guess. It seems like that's what majority of the people are targeting. See how much is the calendar spread for 60 strike Robinhood. Calendar spreads. Let's see. Buy to open. Call. So buying February 28th, selling February 14th. Let's see what's the strike. 60. 60. Let's do 61. Was actually 262. It's pretty expensive. 65. Okay, a lot of premium on these calls. Okay, 65 strike.
With AGT. So it's for a lot of our we're located in downtown Chicago.
So I would target maybe 65 strike. It trades at, the counter spread trades at about 80 cents.
We're very familiar with how trading business. Types of trades he does. There's a problem.
Okay, so that's Robinhood. Let's see, what else do we have of notable? Paycom, MGM, Resort. MGM, I do like MGM. At least I used to like MGM. How's Wynn Resort? Yeah, they got beat up. MGM. After the close. So that's pretty downside. There any big position? Probably not. Probably not. Yeah. Looks like everybody's to the downside, playing to the downside of the puts. Win, MGM. I don't know. China's kind of recovering, so I don't know. Okay, what else is there? That's it. GM. Yeah, all the rest are. And tomorrow morning, so Deer, MCO, Duke Energy, Datadog, PCG. Let's see how's Datadog doing.
The only thing that all we charge is a per trade commission of $15 per trade. That allows us to execute up to 10 option contracts per each trade.
6% expectation. It didn't move much, 70%. Any big expectations in Datadog? 160 strike, that would be 10% move. 14, 160 strike.
Joe typically has no more than 3 open.
The same thing you can do calendar spread on Datadog if you think it's gonna move in that direction to the upside. Calendar spread by open, we'll do February 21. South of February 14. 160 strike. Let's do 162 and a half.
So it just doesn't, it's not like he has 20 open positions. It's just not how we
Okay, so that's Datadog. I think this is enough. All right, any questions? All right, guys, that's all I have for today. Thank you very much. Thank you on broadcast, and thank you on YouTube. Hit subscribe if you like the video. You can watch the recordings, and I hope to see you next Wednesday. Interesting trade and Cisco, afraid of the credit put spread. $2 wide, 19 cents credit is scary, no? I mean, I like to sell out of the money put. I mean, with Microsoft, it kind of didn't work out, right? It was a losing trade. I mean, you could improve your cost basis, but then you would have to do maybe either 62, 61, but then you're within that standard deviation, right? 59 strike. So there's not much demand. But from, it's the, below this level. So it really has to be bad earnings. But I agree, risk versus reward, 10% profit might not be enough, right? Usually we want to do 20 to 30. Then maybe I would do $1 spread and get better, but then you would have to come closer to the 50-day moving average. I mean, the biggest position in Cisco is 65, right? Or 60 strike. So you can say I can sell 60 and 58 put spread, right? Where's the, let's see, vertical spreads, Cisco. We want to do, and let's target 60 strike. Right, so 60, 58 put, you get 37 cents, right? 60, 59, you can get 20 cents. So this is closer to where, you know, instead of a 10% profit, you know, you're getting, or 5%. Oh no, I did 20 cents on $2 or 20 cents on $1, right? So you get 20, right? So you get 20 basis points instead of 10 basis points. And if you do the same thing on call spread, then now you collected 40 cents. Or you could just sell 60.59 put spread. But that would be, you did this one. Yeah, I mean, I did Cisco. I mean, after Microsoft, I'm a little hesitant, but you know, it is what it is, right? And sometimes you do have these 2 standard deviation move. And today, a lot of stocks like Upstart, that was 2 standard deviation move, right? 33%. Dash and semis are in line. All right, so looks like we're close at the bell. All right, let's keep an eye on Cisco after the hours. Thank you very much and have a great day.